Welcome back. Earlier today, it was reported inflation measured by the CPI Consumer Price Index slowed to a rate of 3.1%. That's on a year over year basis. Month over month, it was up 0.1% in November. And what we're going to see are there three main volatile components of the inflationary index that goes back several decades, and it's very telling what it indicates today. This is on a month over month basis. We can see the big mover CPI in terms of gasoline down 6%. To the upside, the biggest movers include electricity at 1.4%, used cars and used trucks at 1.6%. What's more telling on a year over year basis, gasoline down 8.9%. Now, there are many different components of the CPI. We typically talk about the consumer price index, which, by the way, on a year over year basis, up 3.1%. Core CPI, which excludes food and energy, is up 4%. So the fact of the matter is, excluding food and energy, we're up a little bit more. Tells us that food and energy are weakening quite a bit. Here's a category that's very interesting: food away from home, meaning restaurants. That's up 5.3%. There's still a lot of inflation in the restaurants. Again, gasoline down 8.9%. Airline fares down 12.1%. Not a bad time to travel. And rent as a primary residence, that's up 6.9% on a year over year basis. Now, here's CPI, Consumer Price Index year over year basis in yellow. Blue represents the S&P 500. This shows us for all of 2023 so far. Again, today's report's 3.1%. Remember, we have a 2% Federal Reserve target. Federal Reserve does not want to consider lowering interest rates until we go down to 2%. This is one of the lowest lows we've seen in quite a while, but still, again, not near the 2% level. We can see a long term trend to the downside. Here's Corp CPI, excluding food and energy. That's down to a level of 4.0%. This is probably the lowest low we've seen in quite a long time, probably pretty much throughout the entire cycle. And what this is telling us is the fact, again, that core CPI is not down as much as the regular CPI. It tells us a regular CPI, the standard number, 3.1%, that's being pulled down by food and energy prices. Now, in particular, there's one component. There's actually three that we want to talk about today. One of those in particular is gasoline. The yellow histogram bars show us, and this goes back to 2014, so almost 10 years, the year over year change in prices of gasoline. And notice something very interesting. Back in the 2015, 2016 area, we had a lackluster stock market. It really wasn't moving very much at all, and gasoline was declining. But when the rally really started to take shape in 2017, 2018, and 19, gasoline started to increase. Conversely, 2019, COVID crisis of 2020, we saw a lot of weakness year over year basis in gasoline prices. It happens to be a very good barometer of the US economy, gasoline prices in terms of their inflation. Now, we saw a tremendous amount of inflation, of course, in 2021 and 2022 that coincided with strong stock prices. Gasoline now to the downside. We're in negative territory now, which historically we can see is not really a good sign. Of course, we don't want to spend so much on gas, but then again, our consumption of gasoline is very much predicated by the strength of the economy and the strength of our personal finances. Now, here we see gasoline is in yellow. The white line represents the used cars and trucks index within CPI, and the blue line represents airline fares. The reason why we picked those three in particular to talk about today is because they are very volatile. Now, this particular chart is 2006 through 2009. So notice what happened. We had strong stock markets and strong economic conditions in 2006 and some of 2007. And notice especially gasoline, the yellow line, that was very strong. Dipped into negative territory 06. It recovered. Remember, we had very strong oil prices in 2007 and early 08. Certainly, gasoline correlates with that. Airline fares were quite strong as well. But as we entered the 2008 recession, notice what happened. The yellow line, gasoline prices, the blue line, airline fares, and the white line, used cars and trucks. When all three of those lines go into negative territory, and by the way, the rest of these lines are the different indices within the CPI report that we spoke about. But these in particular, gasoline, used cars, and airline prices, when these three go into negative territory, it really does tell us that we have an economic calamity on our hands over here. Well, this is what we look like right now. This is from January 2023 through present date. Earlier this year, we certainly had a lot of reason for concern. The yellow line, gasoline on a year over year basis, was in negative territory. The white line, used cars and trucks, negative territory. And of course, the blue line, airline fares. Now, since then, the white line, which is used cars and trucks, that has returned. It's still at the lower end of the range. All three lines are pretty much in the lower end of the range. So if we were to use all three of these lines together as somewhat of a barometer for the strength of the US economy or lack thereof, I think this would tell us the latter. The fact that we see the decline in inflation, it's not being led by durable goods like washing machines. It's not being led by computers, for example. Airline fares, it represents very disposable money. Used cars and trucks, that's very sensitive to interest rates, of course, and of course gasoline, which really reflects the level of consumption that's out there. All those three lines are negative territory. So to sum up, what we see over here is a pattern. And again, we go back to '07, '08, where we have three lines in negative territory. Of course, the recovery in '09 and 2010, we saw three lines cross to the upside. Going back to present date, we'd like to see these three lines go back to the upside if we are to believe that the strength in the stock market will continue. But certainly a lot of that will be determined later on this week. We have a very, very big economic calendar that certainly can move the market as well. So we'll be sure to update this along the way, and we'll update you as well with any significant changes. We hope this has been helpful. We look forward to seeing you back soon.